No, for whatever that's going to be discussed in the following 5 or so minutes does not change anything. For all you long-time Alibaba bulls or people who are invested in Chinese equities, I think these are the following conditions for you to even hold a position in the first place. If you're really uncomfortable with the Chinese market, if you're uncomfortable with the Chinese government, if you're uncomfortable with the Chinese regulation, you shouldn't even be holding all these different stocks. The problem is, with this new quote unquote development, however you want to put it, it doesn't prove anything new. It's the same old thing all of us have been talking about, especially avid investors like myself. But the problem is you didn't hear it out from the horse's mouth. So today, funny enough, because of the different developments and the different discussions coming out from the Chinese government, people suddenly all woke up saying that, hey, maybe the Chinese government is not that bad after all. So let us just look at how the stock market actually reacted. Now, if you were to look at it, the Hang Seng Index is up around 7.95%. The Hang Seng Tech Index is up around 18%. What is this? These are not penny stocks, by the way. This is an entire index with some of the largest and strongest companies in China. You have your Alibaba, your Tencent, your Meituan, your JD, your Pinduoduo, and the list goes on. All these huge tech conglomerates essentially got slaughtered over the last 1 or 2 weeks or so. Essentially, the entire market was just selling down everything that is China related. And then you can't really be surprised by this strong rebound. Whether is it a relief rally or not, I'll leave the discussion at the later part of this video. Now, if you were to look at individual stock picks, Xiaomi is up 14%, JD Locks is up 16%, Baidu is up 18%, Baba is up 20%, Tencent is up 21%, JD is up 31%. Even Evergrande, you do know what that company does, right? It's essentially the property developer that was embroiled in the entire Lehman 2.0 moment. It's up 12% today. Who wants to buy that piece of nonsense, man? So essentially, China's State Council's Financial Committee holds a meeting that focuses on the current economic situation and the issues in the capital market. So it's an important signal that the central government is going to improve the sentiments and essentially even the China index like the Shenzhen or Shanghai Composite Index were also rallying around a good 3 to 5%. So in the discussion, these were the key pointers that transpired during the meeting. Number one, they pledged to keep capital markets stable. Number two, they vowed to support overseas stock listing. Number three, they said the dialogues with the US regarding ADR, which is the American Depository Share, is good. Number four, they promised to handle risks for property developers. And number five, they clarified regulations of big tech will end quote unquote soon. So now let's discuss these 5 pointers individually. On the first point, they pledge to keep capital markets stable. I'm not going to tell you that, oh, I told you so, I knew it beforehand, I'm such a smart aleck, I'm such a genius. In all honesty, I don't know what the Chinese government is planning to do. Heck, I think no one even knows. All the commentators, all the reporters, all the YouTubers going on and on about how the Chinese government is going to do this, do that. Nobody has a clue. Unless you are a member of the CCP, no, I don't think even being a member of the CCP qualifies you into the entry ticket into understanding what the highest government body is thinking. You have to be one of the highest government officials out there. However, in late 2021, I've been talking about it from various sources, from various spectators, and especially various critics of China. There has been a common theme in 2022 to bring forth stability. Stability in terms of socially, politically, economically. And this is a core theme for the CCP because they are experiencing some sort of problems and challenges in the near term. And how can you bring stability to an economy if your capital markets is just losing 20% or 30% in terms of value every single week? Of course, I understand that they have the Shenzhen and Shanghai market as well. However, even though you might say that China might not be concerned about their Hong Kong index or their Hong Kong stock exchange, it is still by extension one part of China. Hong Kong is not an independent country. So it doesn't give them a special authority or a special identity. So especially in this case, if your capital market loses its function in trying to raise funds and more importantly, attract investors, then what's the point of having a capital market in the first place if nobody wishes to go into invest or if none of the institutions favor putting in money? So it essentially loses its function, and I don't know how it's going to help resuscitate its economy. On point number two, they vowed to support overseas stock listing. I think this news is always old news. There was a recent discussion, I think early in Jan or Feb, talking about how Chinese regulatory authorities have been open and have been keen about allowing or resuming US stock listing. On point number 3, they said that dialogues with the US regarding ADRs is good. So this is also old news. This has been going on and on since 2021. I mean, nothing substantial has changed. China has always been saying that, oh, talks has been ongoing. We hope that we can come to a consensus to the US counterparts, and then to and fro. And then the next day you see that, hey, US listed 5 companies that they wanted to delist and give them a warning. So in this instance, there was no further development. China can say it's good, but if the US doesn't say that it's good, the delisting risk is still real and is still present. So I have no idea what exactly is good about it. On point number 4, they said that they promised to handle risk for property developers. The funny thing is this entire property saga and how the crackdown on Evergrande and all these different property developers, it's been going on for quite some time now. I think investors has been already extremely numb about the different developments, especially in this property sector. I'm not going to proclaim that there is an easy solution, that's a one-size-fits-all solution that will be able to allow for a soft landing for this entire crisis that happened. It's not. But I'd just like to say that if there really is an issue and they would like to solve it as soon as possible, I think I wouldn't even be doubting their abilities in trying to solve problems. But of course, this is subjected to many challenges along the way as well. So we'll see how things go for China. Only time will tell. I think the only thing I'm uncomfortable with is especially for people consuming content regarding China or regarding people looking at China from a very anti-China lens. Essentially, they're saying that, oh, China has lost its way. They don't know how to get themselves out of the grave that they've dug for themselves and stuff like that. The funny thing is, these people seem even more concerned for the country than the government. And that really surprises me. I think I'm in it for a ride whenever I listen to them speak about China. It seems like they know China's history, China's culture, China's political climate, much more than even Chairman Xi himself. That's simply incredible. So I'll just leave my comments to myself. And on the last point about them clarifying that regulations of big tech will end soon, I find it quite ironic. There was nothing substantial that was discussed or that was revealed to the public. They didn't say that this was a guarantee. And of course, China being China, you know that the government can always go back on their words. Who is there to counteract all the different decisions that they decided to crack down on all these big tech companies? None. So then it voices down to the same question. Do you trust the regulators or do you not trust the regulators? If you do not trust the regulators, please don't come into Chinese equities, because this rally might be just a relief rally. Even though a 10-20% increase might look nice in the short term, but it totally doesn't mean anything. So if your fundamental bear thesis of all these different companies is still because of regulatory uncertainty and because you don't trust of the government and you think that, oh, uncertainty in regulations cannot be quantified, then please don't come in. There is no point trying to pit yourself against this. Of course, if you're trading, please go ahead. But I myself, I'm an investor. I'm not trying to time the ins and outs. I'm not trying to time the lows. And I like to buy companies at a valuation that I'm comfortable with. Compared to a lot of other investors out there, I'm a lot more comfortable with this so-called regulatory uncertainty. Now, if you still remember, JP Morgan essentially released a report not too long ago asking people to not catch the falling knife of Alibaba stock. So this particular JP Morgan analyst, Alex Yao, said that he is quite bearish in the short term, but at least in the medium to long term, he feels like it's an easy multi-bagger. So let's take a look at Alex Yao's price target. If you can see, since the start of 2021, the recommendation has always been on overweight. And as you can see, his target price for Alibaba throughout 2021 was around 250 to 320. And that was his optimistic view of the company. And just recently, he recommended that Alibaba was underweight on the 14th of March. And today, it's the 16th of March. And his target price suddenly reduced to $65. And right after his discussion, essentially the Chinese government came out to give their words. And hey, Alibaba, I'm currently trading in the Hong Kong exchange is at 86. So that's probably translated to around $88 to $89 USD. So to just discuss briefly, I think in my previous video titled WTF is happening to Alibaba, at the end of the video, I did mention 2 specific pointers in order for Alibaba to see any short-term rally or any short-term recovery. So the 2 specific factors are, number 1, investors need assurances from the government. Assurances with regards to not destroying the company, not issuing more fines, not having more tighter regulations on all these different tech companies. And number two, they need the delisting fears to go away. And essentially, for the China and US regulators to come to a consensus and hug each other again. So the thing I got wrong is I didn't expect the Chinese government or any top officials to come out to give any forms of assurances so quickly, especially to international investors, because I think that has been the common consensus and the common understanding across the globe that the Chinese government essentially don't care about investors. So despite being neglected for so long, I still chose to invest in Chinese equities because I fundamentally don't believe in some of the bear theses and strongest bear arguments out there against Chinese equities. Of course, everyone have different risk profile, everyone have different risk tolerance, and this is a specific risk type that I'm willing to take on, and everybody should do whatever you're comfortable with. But that being said, it doesn't matter if you didn't buy the dip. But you know what matters? Smashing the like button, of course. So please remember to smash that like button. But anyway, for those of you who have been following me for quite some time or have been catching all my videos that I've been releasing, you can see that in one of the previous video, I did say that I stopped buying Alibaba stock. And I have not been buying since December last year. So I'd just like to point out a recent video from Andrew. He recently released a video called "This is what all-in really looks like. No cash, stocks crash, my portfolio." And you can see most of his stocks holdings, including Alibaba, is down around 50-60%. And it's quite incredible. And that's the thing. Of course, we know when people are fearful, you should be greedy. And when other people are greedy, you should be fearful. But the issue is all of us are being trapped in our own circumstances. Some of us have a job. Some of us have daily expenses. Some of us have to take care of our family, have to pay down mortgages, have to give allowance to our parents. And that's reality and that's life. Even though there are a lot of discussions online, YouTube videos, some saying that recessions are coming, some are telling you to fervently buy the dip. We don't print money. We are not the Federal Reserve. And even the Fed looks like they're running out of ink. So what more an individual retail investor like myself, I'm continuously buying the dip. I don't print money and I don't have unlimited amount of capital. So that is why I have stopped buying Alibaba because I've been hoarding cash for the last 3 months. So to put it frankly, sure, I do have a small cash position now and I'm essentially quote unquote trying to time the market. But I'll just like to say that I've been fully invested for quite some time now. And you as a viewer, just do whatever you're comfortable with. Please stop looking at all these so-called finance YouTubers, people who are renowned and they've been investing for 10, 20, even 30 years and telling you that, oh, a recession is coming. This is what he or she is doing, and just follow blindly. And honestly, for those of you who are in this Alibaba community, most of you have a cost price of around $120 to $180, give or take. So for those of you who did average down, congratulations. For those of you who didn't average down, please don't FOMO and please don't panic sell. Those two situations are essentially the worst situation to be in. I think especially when the broader market is experiencing some sort of turmoil, I think it's even more crucial to sit down and take a cold hard look at your portfolio. Is this something you're comfortable with holding for at least 5 to 10 years? If you're not comfortable even holding for 5 years, then don't own a stock for even a day. Unless you're a trader. If not, if you're an investor, I don't think you should be doing anything other than reevaluating the underlying thesis of the company. Has anything changed? And then make your decision from there on. So with that in mind, I'd just like to thank all of you who have subscribed and has been following me in this journey. I'm currently at 10.2 thousand subscribers. I have no idea how and why so many of you want to listen to me. Whatever it is, for those of you who want to laugh at me, for those of you who want to mock me, for those of you who really just wants to be in this journey with me, please feel free to carry on. So if you were to just look at my face now, I can tell you that I don't really care about all the different unpleasant things that you have to say. Please feel free to continue doing whatever marketing that you have been doing for me on whatever other platforms out there, or even on all the different forums out there. I want to thank you again for helping me bring more clout to my channel. So with that in mind, I believe that most of you are still in the red on all the different Chinese equities. I am too, and I'm extremely transparent about it. My cost price is at $150. I personally am in this investment for quite some time. If you want to stay on in this journey, please remember to hit the subscribe button. And if not, I've also known people in my Discord community that have sold out their entire position, have trimmed down some of their position, and some of them had diamond balls and went in even harder and bought even more stock. So you do you. I'm not here to advise you. I'm here just to provide you entertainment. So with that, I'll see you in the next video. But more importantly, I will see you on the moon. Goodbye.